Hello, viewers, and welcome to the latest episode of The Huddle. Tim Poole here, editor of Gambling Insider, and I'm with Stephen Salz, CEO of Rivalry. Stephen, thanks for joining us.
Yeah, thanks for having me.
Looking forward to speaking to you about millennials, Gen Z, esports, casino, loads of different topics. To start off with, your tagline, as I say, is the book, the operator for millennials and Gen Zs. Tell us what this means, how you kind of meet that expectation.
Yeah, so the company was built top to bottom for millennials and Gen Z, even so much as I'd say probably 80% of the company in terms of staffing are millennials and Gen Z. And myself, I'm a millennial. So it's this typical thing where you have generational cycles in tech, consumer tech, whether it's gambling products or not, where you have a demographic or a generation that rises up and then builds the products for themselves and for their own generation. So yeah, we came from this demographic cohort. We felt it wasn't well served. We have a background in not just, let's say, online gambling, but gaming as a video game industry as well, and building great products for them. So we wanted to build a product that met them where they live and how they spend their time and how they grew up. And this is a generation that grew up on the internet and steeped in internet culture, and just everything from user experience, onboarding, KYC, depositing, withdrawing, even the way the bet slip looks. And there's different kind of surprise and delight along the way that feels clearly very much built for this demographic, down to the marketing, creative, even the way that our customer support speaks to you, everything top to bottom built for somebody that grew up on the internet, that was born in the late 90s, early 2000s, that has a very different type of consumer experience that they're used to. So really it was catering everything, the entire experience to that cohort.
Mm-hmm. I'm glad you were the one to say that first, because I was going to say respectfully, as a leadership team, you guys look quite young.
Yep.
In terms of I guess there's with anything, there's pros and cons to this. I don't know if you could outline them. And I take your point of everything you just explained, but I was going to ask as well, if esports wasn't so I guess key to the offering, do you think that makeup might be a little bit, let's say, again, respectfully, older generations?
Yeah, there's been some cons for sure. I can maybe do the cons and then I can talk about the pros. I think
Sure.
The cons are like myself and sorry, my dog's barking. The cons would be myself and my co-founders. We ourselves haven't built products in the online gambling industry before. We certainly have people that have and have come from other operators. So we came more from consumer tech, video game industry, things that are adjacent and definitely core to the demographic, but not specifically in this sector. So I think some of the initial cons were perhaps like a somewhat, I wouldn't say naive, but we didn't fully appreciate the complexity of the product set and fully appreciate some of the nuances that are required in making it successful. The example I always give is, although Rivalry always had a roadmap of adding, esports, then traditional sports, then casino, and having this whole complete offering, I think early on we were maybe a little too focused, or we thought that you could have a slightly more curated offering and find success. And we found out pretty quickly that this category is a little bit more like a buffet business than a chef's tasting menu, and you do have to have kind of everything and let people pick and choose what they want. And although we had on the roadmap to have the complete offering, we perhaps accelerated the rate at which we got there, because we realized pretty quickly, even though we can have a great esports product and be great at acquiring bettors that want to bet on esports, somebody that's 25 also is interested in betting on football or the NBA or whatever it may be. And they're also interested in potentially laying down a hand of blackjack or whatever it may be. So that was a learning. And then even just some of the regulatory stuff, we had built consumer products in the past, but they weren't in highly regulated industries like this. So I think it's better that we didn't know how challenging some of that stuff was going into it. Otherwise, maybe we wouldn't have done it.
Sure.
So we learned that along the way. The positive, though, is I think a lot of Rivalry success is rooted in the fact that the composition of the team is very different than what you would typically find in online gambling. The fact that the way that we've designed our engineering team and creative team are people that come from adjacent industries, but not really from the online gambling industry. Therefore, we're bringing best practices from modern user experiences and modern consumer products for this demographic, and then applying them into the online gambling category, which has allowed Rivalry to have some of these more novel experiences and novel products and UX user experience that looks quite different. And then even down to how we market and how we think about marketing in non-traditional ways and going at it through non-traditional vectors is also really helpful. And I'd say especially so in terms of attracting talent. Not to say that there's not talent in other companies in online gambling, but if you're early in your career, you're under the age of 30, you're a highly talented engineer, a highly talented creative person, just being completely candid, working in the online gambling industry is not necessarily the first place that most people want to go. They have other opportunities in other sectors that maybe are a little more interesting for them. And Rivalry's brand and our approach and the composition of our team and the way we think about product, the way we think about creative and marketing has allowed us for sure, I think, to attract talent that would otherwise not work in this industry to come work in this industry. So we just have like really high caliber people that have incredible backgrounds who've been able to therefore build out this kind of team. So it's also a source of strength. And I think some of the cons and weaknesses are behind us at this point.
Yeah, interesting. Love the honesty. We always appreciate kind of people who are happy to talk about the cons as well as the pros, because at the end of the day they exist. It sounded like your dog wanted to guest star with us. What breed of dog is it? Quick side note.
Yeah, he's a golden doodle, and it's funny because there's an interview or something I did recently, and there's an image of when the person came to my place to record it, and there's a picture of him eating the script and like eating the questions all they had before it started.
Brilliant. So, fantastic.
Yeah, you're a little safer like virtual for this.
Absolutely. You guys went public via a direct listing. Tell us about why that option, because I think when you think of going public, you think of IPOs, and for a while everyone thought of SPACs. And how do you kind of reflect on your performance, the performance of your stock since you went public?
Yeah, I can't say I'm the happiest about the performance of the stock, but I can explain the direct listing. So it's I think they have this elsewhere. It's not that common though. Not many people do direct listings. We did it because I don't think we were prophetic, but we started building out. I mean, to list a company, you start like 8 to 10 months in advance, sometimes even a year in advance, just the legal, building out the prospectus, all the filing material, etc. So we started that in early 2021, which people remember as this kind of meme stock market. Everything was going up to the right, GameStop, crypto, NFTs, it was that whole moment, right? So the market was really hot generally, not just for our category, but generally. We were intending to go public anyways, regardless of what was happening in the market, for various structural reasons and operational reasons that we benefited from. So we're happy we've done it. But it was a really hot market, and it was clearly a really good time to raise capital for a listing earlier in the year, which was when we started the process. And when you do a typical IPO, the way that it structurally works is you can't actually go to market to raise money for your IPO until your prospectus, which is like that giant multi-hundred-page filing, has been completed and approved by securities regulators, which is at the end of that 8-month process, basically, of building out all that material. So if we did it that way, we would have had to have gone to raise money in September of that year, and the company listed in October. With a direct listing, you almost kind of invert it the way that we did it, where you raise money right, essentially whenever you want, but as early in the process as you possibly can. The money sits in like escrow, it just kind of sits there. You don't have any access to it. You have a certain amount of time then to clear that prospectus, that filing, and go public. And then once you've cleared that, the money is then unlocked and goes to the company. So you basically have to hit the milestone of ensuring the company will actually trade, and then the money's released. So the benefit, we got lucky in a sense where the company started to trade in October of 2021, and things started to already come down then. And it was the end of the meme stock market. I think raising money then would have been really challenging. We ended up raising money early in 2021 when things were still great, and then the money just stayed locked. So yeah, it gave us like this really great flexibility to go out and talk about the company when there was a lot of things happening in the market. So that was good. And in terms of the performance, we've actually outperformed our sector over the last 2 years or so in terms of just like relative percentage performance. But our sector and just tech generally from the start of 2022 until today has suffered from just challenges within the stock market. Then you get inflation and rising interest rates, which makes stocks usually also go down, especially not the biggest companies in the world, usually the smaller cap stocks. So we've been kind of baby out with the bathwater a little bit, regardless of the fundamental performance. But even within the context, we've still had good relative performance to our peer group.
Yeah. Staying with the financial theme, you recently reported your Q3 results. There were record numbers there. I think it's maybe important to note that because you're a younger company, obviously records, not to downplay or say it's easier, but it's the records might come in a little bit because you're working with lower numbers from before. Yeah. But yeah, walk us through kind of, the highlights and in terms of the performance, are you happy? Are you not happy? Quite a simple question, actually, in the end.
Yeah, so definitely there is law of large numbers. It gets harder to put up 50, 100%, 200% increases as the company gets bigger. Even we've experienced that this year. So
Yeah.
if we just talk about betting handle, for example, 2021, our handle and most of our metrics was up over 200%, 2022 also over 200%. This year, most of them have been more like, for example, this quarter, handle was up 50% year over year. And the full year is tracking to over 100% year over year still, but 100% is obviously down from 200%. So yeah, definitely as numbers get bigger, harder to do 200% over and over and over and over again.
Exactly.
But we've still had great performance again on kind of any measure. We're happy year over year, which is still a good measure for us, just because there is some seasonality, a little bit less so than there used to be, but a little bit. So yeah, most metrics up, 50, 100%. And then I think the thing that was really core to the quarter that we were proud of was the customer economics, because growing the company is one thing, but you need to be able to grow it economically with some operating leverage and be able to actually get to profitability at some point. And the only way to do that is you need to not just be growing 100% year over year, and then let's say increasing your expenses 100% year over year at the same time, which we don't. So we speak to that a lot, where the company's grown a lot this year, but our operating expenses have been completely stable. We haven't had to increase our operating expenses to grow significantly year over year, or even specifically on marketing. We were up, again, every quarter this year, we've been up even up to 200% still on some metrics year over year, but our marketing spend has actually been down on a total absolute dollar basis year over year. So getting a lot of growth with actually even less spend. So right now, Rivalry has the best acquisition metrics and the best customer economics in its history. So the numbers we gave just this time this year versus this time last year, just two of them, was our cost of customer acquisition is down about 20%, and our average wagers per customer, average handle, whatever you want to call it, is up about 30%, which is similar to, let's say, like an ARPU figure as well. So yeah, where every dollar we're putting out this time this year is bringing in 20% more customers, and they're wagering 30% more, and our margins are up a bit as well. So we're generating even more incremental revenue on top of that 30%. So that's really like the path to profitability, and just the path to really being able to get economic scale is you need to also be improving all of those metrics. So we're probably most proud of that as much as anything quarter.
Yes, I mean, certainly that's an industry-wide concern, and given the amount of big operators with huge backing that aren't really getting anywhere near where they should be in those, as you say, customer economics, as you said, it's an encouraging sign for Rivalry. Yeah,
it's you should have to show operating leverage. You can't have a one-to-one relationship with your expenses and your growth. Otherwise, you're a hamster wheel you can never escape from. So I think, and especially in this current market environment, it's different than it was a few years ago. People were willing to finance growth at all costs business models for the last decade leading into 2022, which was not just online gambling. You can think about rideshare was the same thing. Like that was always Uber's. That was always Uber's even investor pitch was, we'll just outlast everyone. It was essentially we can just stay solvent longer than everyone else can, just because we have access to so much money. And then once they're all out of the market, we'll figure out a way to turn a profit. And that's conceptually what they're trying to do now, right? So yeah, there's no room for that anymore in any business, gambling or not.
Yeah, no, I think that's completely fair. And even certain other operators, we're seeing them just sort of focus a lot more on profitability. And maybe we can only speculate from here, but it's you wonder if that's not because the journey naturally went there. It's because, as you say, there isn't really the tolerance for it anymore.
Yeah, I think it's definitely the latter. There's market constraints there's no tolerance for it, and nobody's getting rewarded for it. So
yeah,
you need a bit of a mix. You can't slow growth to zero or negative and then show a small profit and expect people to congratulate you for it. You still need to, because that would be indicative of the fact that you actually don't have any operating leverage, because if you have to cut everything and go into decline just to get there, then there's other issues, obviously. So yeah.
Sure. Let's talk about the Ontario market, Ontario. So my British pronunciation might not be spot on with that one, but an important market for you guys. Where do you fit in kind of, I guess, the wider jigsaw that is a very big market today?
Yeah. Ontario is similar to even U.S. states. It's the only market we're in that has that kind of dynamic, where you've got the DraftKings and FanDuels and these very large, very funded operators in the hot geographies in the industry right now. So we still position there, though, the same way that we do elsewhere, which is from a under 30 demographic focus that we lead into from a gaming, internet culture, esports top of funnel. So we're still going about it the same way that we go about it in every market, where we're not trying to compete for NFL, obviously very popular in North America. We're not trying to compete for the 35-year-old plus NFL bettor against DraftKings and FanDuel. Or we're not trying to go for the 40 plus casino player against large casino operators. We're still targeting Rivalry's core under 30 demo that we're very proficient at accessing, getting in front of, acquiring at a good cost of customer acquisition, retaining, engaging. And the way we go about that is the same way, is this front door that is very internet culture, gaming, and esports led. But beneath the funnel, they do everything. So even year to date right now, Rivalry globally, we're about 50% of our total wagers is casino, 35% is esports betting, and then 15% is sports betting. So within our sportsbook, esports is still dominant or a large percentage, but across the mix, we're quite distributed. So we have that same experience in Ontario. It's this gaming, esports, predominantly internet culture top of funnel that then brings that customer in. So it's positionally similar for sure. Yeah.
Interesting. Great to hear the stats of the kind of mix of the gaming and the customers, and that kind of leads into my next question. I'll flip around how I was going to ask the question based on the stats that you just gave me. So the bigger percentage is for casino. Are those customers coming through the door though via sports first, and then it's a cross-sell job?
Yeah. We find, and we find specific esports titles bring in players that are more likely to participate in casino versus others. But it is definitely still a sportsbook top of funnel and predominantly esports top of funnel. I would say we're finding a bit of diversity. So in some of our geographies, we are finding NBA, really popular title among under 30s outside of Europe, but in some of our other geographies. So we've got other access points that are not just esports, but directionally, it's definitely a sportsbook top of funnel, and they come participate in casino.
And that's interesting. But when you say there's certain esports that might encourage, might appeal more to casino players, which ones are the best ones? Which ones are the top kind of esports for like a casino cross sell?
Yeah, it's almost seems like it's like the relative maturity of the cohort, I'd say. So for example, like Counter-Strike, we find people would be more apt to be cross-sold into casino versus maybe like League of Legends. So it more has to do with Counter-Strike is a longer standing esports. It is definitely a more mature average age would be probably this is my guess, but I think that the average age of the Counter-Strike viewer and gambler is probably the highest among any of the large esports titles, being, let's say, League of Legends, Dota, Counter-Strike, Valorant. So we find that as well. And then we also find like the mobile titles as well, like the mobile esports titles. But I think that has to do a little bit more with geography, where the places where mobile titles are popular are areas where culturally casino in that way has been like more steeped in the culture. So, like let's say Southeast Asian markets a little bit more so. So that one is maybe like causation correlation there a little bit, where it could be more just the culture in which the thing exists in rather than like the game specifically. But it's somewhat straightforward. Sometimes also where it's just a slightly older demographic we find just has a higher propensity to also take some of their share, some of their wallet and participate in casino.
Sure. Really interesting kind of the breakdown. And I've got a couple of final topics. The last one will be on esports again, but to move to, I mean, not that they're totally disparate anyway, but to move to traditional sports betting. And I think it's particularly interesting with the, as you say, the age bracket that you're going for. Talking about the US sports betting landscape, but as you say, that kind of applies to Ontario as well. You've got Fanatics now, and you've got ESPN Bet. Loads of hype, loads of news about these companies. I guess the question is whether they'll convert or not. But as a fellow player on the scene, how does their arrival impact you? And actually, I suppose, given your specific offering, are those brands that the under 30s and millennials and Gen Zs could also be looking at?
Yeah. So one clarifying point would be that we're not in the US, but we're observers. Definitely of the market and observers of how it potentially relates to Ontario. If I had to take a look at the US, and this is just my view as an industry participant more so than us necessarily operating there, I'd say that those brands, from what I can tell, are going at it where they're trying to get the large slug of like a slug of the main market share, which is where DraftKings and FanDuel and everyone else is participating, which is this core kind of 35 plus sports bettor, 35, 40 plus casino player, which is a good chunk of the US TAM. That's what I've been observing, is that they're just going at it through their channels to try to get that real, let's say, more lucrative component of the market. We haven't seen anyone other than maybe Better, like the BETR or Jake Paul entity that is having a millennial Gen Z approach, and is also going about it similar to Rivalry, being very content led, very clearly internet culture led, with Jake Paul and everything else that they have there. So from what we can observe, they are just trying to be in the same game that the large pre-existing, almost like duopoly of DraftKings and FanDuel there are participating in. I think that will be challenging. So it'll be interesting to see after the initial run of lucrative incentives and offers that are typical with a new launch, where they'll be the best ones, and they might get some people switching off to leverage that. It'll be interesting to see 6 to 12 months from now when they've kind of run out of that playbook, because you can't offer these incredible, hey, we just launched initial incentive offers forever.
Yeah.
So when that runs out, the question will be like, is that customer that they brought in through that sticky or not? I'll be very curious to see that. So my only view would be, there doesn't seem to be that many people trying to go for niche demographic cohorts in a really targeted and focused and specific way. And everyone seems to still be going for some share of the big prize, which is the main, call it, revenue generating demographic right now. So that's kind of what we've been observing in the US, I'd say.
Yeah, a fair assessment. I mean, what we talked about earlier, the customer economics will, as you say, will certainly come into play at some stage, especially when the kind of initial marketing and funding comes to an end. I promised a final question on esports, and I think you'll enjoy answering this one. It's one I've asked loads of executives, very varied responses. As you might predict, those on the esports side lean towards one way, and those not lean towards the other. But very broadly, do you think esports betting will ever reach a stage where it overtakes traditional sports betting in terms of handle, volume, and popularity?
Probably not for a long time. I think you can tell I'm fairly candid and real with the answers I give.
Mm-hmm.
And also, this has been part of what we've been trying to talk to the industry about for a very long time with Rivalry and on panels and elsewhere, where people ask, and recently with some of the shutdowns and things like this around esports betting brands, I put something up on LinkedIn the other day showing some of our investor material going back to when Rivalry first launched, showing that this thesis that Rivalry's had has always been a demographic thesis that just happens to be led by esports and gaming as a top of funnel, but ultimately happy to have that customer do anything beneath the funnel. And it's that focus that has allowed us, I think, to find success where others haven't. But we see the issue with the other thoughts on esports, and maybe people that are answering that question saying, oh yeah, 100% it's going to be like any day now kind of thing, is if you really believe that, and if your whole focus is you think the esports TAM itself is that big and is the whole prize and is the whole thing, I think you're actually missing the entire story here, which is esports is just rooted in gaming, and gaming is rooted in internet culture and is the most popular content category on the internet for under 30s. Therefore, it just happens to be a great access point to that demographic. So will esports, will the line overtake the all other sports betting handle or just revenue or whatever it may be? Probably not for a very long time, if at all. But will it continue to grow on an absolute basis? 100%. I think it'll be one of the fastest growing categories on an absolute basis. The way it's going to grow, though, is definitely going to be consumer education. There are still many people that watch esports that don't even realize you can bet on it. It's going to be regulatory stuff, just more buy-in for the regulators and awareness. And it's going to be publisher buy-in, which we're already seeing more and more of, where the publishers are actively selling their data and having data rights agreements with odds providers to enhance the quality of the betting product. We're seeing little inklings of publishers warming up generally to sponsorship, ones that previously may not have. So they're becoming aware that their demographic is aging, who's watching the esport and over the age of 18 of legal betting age, and potentially is an interesting category. So lots of structural things that I think can happen to help with the growth. I think it will continue to be an extremely high growth area within online gambling. And I think that anyone that understands it as a demographic access point will find it highly lucrative and very successful, and an incredible way to go about being in this market for that demographic. And you have to have an intimate understanding and be a believer in esports like we are. But just from a purely numbers perspective, the esports betting line against the global traditional sports betting line, that crossover point is probably like very far in the distance, if at all, if I'm being realistic. But for Rivalry, we don't really care about that. For us, it's the under 30 demo. So is the line of the under 30 demo TAM going to cross over the existing cohort demo TAM at some point? That's probably sooner than people think. And like that's the real narrative and kind of what's special about esports, in my opinion.
Yeah, no, a good answer, and I like that you broke it down in terms of in categories. I take your point certainly that within gambling, esports betting will keep growing, and obviously in the pandemic we saw a surge. I believe that I think the data's shown that it's slowed since, but it's still growing. Importantly, so a fast growing vertical, fast growing segment.
Yeah, absolutely. Yeah, for us, we benefited from that in COVID, but we've seen continuous growth since then for the reason that we weren't relying on a spike owing to a very unnatural circumstance, but it was it's our success in the demographic that has allowed the growth, not just because esports is a thing that got a little bit of a COVID bump. So we're going to continue positioning that way for sure.
Well, Steve, been fantastic speaking with you. Best of luck with everything you're looking to achieve. Hopefully we can catch up maybe after Q4, Q1, whatever the industry brings us. But thank you for taking the time to join us and all your answers so far.
Appreciate it. Yeah, thanks for having me.
Thank you.